bringing in the changes, but not in the way Uber hoped. Since going public in May, its share price has fallen almost 25%. The other ride-hailing IPO of 2019, Lyft, has reversed almost 50%.
I think a lot of people who were kind of drawn to the space without enormous sophistication and depth said, hey, this is a great place, you hang out here, you get rich, right? If you stand right here, the bride will throw you the bouquet, and you got hit with a bowling ball in the face 3 times, and now you're not sure it's the greatest place on earth to stand.
Part of the problem has been the volatile trading space, unsettled by the US-China trade dispute. Companies which had achieved enormous valuations, like Uber at nearly $76 billion, faced sell-offs from investors skeptical about potential profitability. That caution hurt other companies. Office-sharing startup WeWork delayed its offering indefinitely. Scrutiny of its growing losses has caused its valuation to freefall. So what comes next? Well, economists still see US exchanges, highly prized for both their prestige and money-raising potential, as maintaining their global appeal. But they do predict that the US IPO landscape will look very different in 2020.
I believe that in the long run, we could see some benefit for tech investing in general, where the amounts of capital sort of infused into companies pre-IPO aren't quite as enormous, and the valuations stay realistic until the company is subjected to the rigors of the public markets.
That could affect Airbnb's hotly anticipated listing, expected next year.
People will be drawn back in, and the folks who stay in the business and do the hard work to figure out which is the baby and which is the bathwater will be richly rewarded again, because a bloated environment where people are gorging on risk because there's no return on low-risk assets creates all kinds of mis-signaling and distension, which, however painful the adjustment, we are decisively better off without.
Companies aiming to go public will be looking to learn lessons, but the risk-averse investors will be making the decisions about how much they think these companies are actually worth. Nick Harper, CGTN, New York.